Yeah, but the president said he wasn't going to do a deal if it wasn't a good deal. He was pretty clear about that.
And he walked just in North Korea. He walked up away from the table because he didn't like where things were going. So he's already demonstrated to the world a propensity to, if you don't like what you're getting, walk away. And
so is this a good thing then, Phil Orlando, that the president is saying we're not going to agree to something that's not a good deal? Should we just overlook this 500-point sell-off today because you point out that we're up 25% since the bottom in December?
Well, I don't think you need to overlook it, nor should you overlook it. But perhaps there's a sense of complacency on the part of the Chinese here. Now, remember that as Trump was ratcheting up the tariff pressure last year, the Shanghai index came down by 31%. And the Chinese GDP last year was only 6.6%, the weakest economic growth we've seen in 28 years. Now, over the first 4 months of this year, the Shanghai index has rebounded and has gotten back most of what it lost last year. So perhaps the Chinese have sort of this false sense of complacency that everything's fine and we can, make some new demands of our own. Trump, I think, has been very clear that if we don't get a deal that we think is good, fair, equitable, we're going to walk away, much like he did with the North Koreans with the nuclear deal earlier this year.
Right.
So I think that this is very symptomatic of Trump's negotiating style, and the Chinese have to come to the table with something that the United States believes is fair and equitable.
It's important to point out the market backdrop, which the Wall Street Journal writes about today, is that the vast majority of asset classes are moving in lockstep, all higher, that 90% of 70 financial asset classes have posted positive total returns through the month of April. In bonds, credit market products, stocks, commodities, even cryptocurrencies, even Bitcoin. And so the issue is that does this tweet not just reintroduce volatility that is fleeting, but more lasting? Again, it's hard to read whether investors get really upset. And it's like, is this what we're going to have to deal with when people are asking the question of, like, what does the market look like for the rest of the year with this incredible run? Like, is this volatility, does it go away or not?
Well, I think when you think about the market here, it has had an incredible run since the Christmas Eve lows. And I think that part of that has had to do with the Fed, okay? But I think that it's kind of interesting. Every time that the market has a strong run like this, gets to new highs, valuations start to get stretched, it's almost like this trade issue comes up, brings us back down to reality. But President Trump is negotiating here from a position of strength. If you look at the economic data, we have seen an improvement through the course of the first quarter, right? And so he's feeling very confident. But my question to you, Gordon, is the 2020 elections are right around the corner. He can afford to be tough and take a hardline stance here right now and for the greater good of our economy for the longer term. But when does his stance change, and are the Chinese betting on that?
Well, I think that 2020 actually argues for him not doing a deal because, he's got to win those big industrial states. He can't flop on these issues. And he's probably going to win the heartland anyway, even if there are these Chinese tariffs on U.S. agricultural products. So I think that he's probably thinking, a deal for him is not necessarily good, especially with all the things that he's been saying in the past.
But manufacturing job creation hasn't been great in the last couple of months. We did have a positive print for the month of April. Payrolls were up 4,000, but that was short of expectations. And then they were actually down 6,000 in the month of March. So we had this kind of renaissance in manufacturing and in job creation there. But lately, it hasn't been that great.
Now, the National Economic Council Director Larry Kudlow responded to the president's tweet. He was on America's News headquarters yesterday. Here's what he said.
The president is, I think, issuing a warning here that, we bent over backwards earlier. We suspended the 25% tariff to 10, and then we've left it there. That may not be forever if the talks don't work out. China has got to end its unfair, non-reciprocal trading system. They're breaking the laws. We hope they'll come around with this deal. But if they don't, the president is saying, guess what? The tariffs will...
Whether there's a deal.
Phil Orlando, your reaction to that, it does sound like the president's making these threats to try to affect change.
I think that's absolutely right. And one point we've got to focus on, Maria, about 2 weeks ago, we got the flash report for first quarter GDP here in the United States, 3.2%, was much stronger than expected. We were at 1.8%. And when you dig into the numbers, we got 100 basis points of GDP growth from a positive net trade number. That is a glimpse into the future. This is exactly what Trump has been looking for in terms of doing this entire China trade negotiation, because his view is that we could shrink that deficit with China and grow the economy 1% faster. So he's seen, in a sense, what the results could be. He's got to stick to the course here and try to get a good negotiation and get U.S. economic growth higher based upon more equitable trade terms.
You have to believe if the Chinese do not follow through and do this meeting this week, Gordon, this sell-off in stocks continues.
Agreed.
This worsen.
Agreed.
Oh, certainly, because, at this point, the Chinese are going to maybe come to a deal, but we're talking months down the road, because you can't give in to Trump's pressure, and Xi Jinping, as fragile as it is, this makes it much worse for him.
The Chinese deal, though, has not been priced into earnings, Lindsay. I know it's been priced into the market, but it's not necessarily CEOs, when they gave guidance, they weren't saying, well, part of this strength and optimism is as a result of what we're going to get from an opening markets in China.
In fact, coming into the year, they've been very conservative. They continued that with Q1. We have 2.6% earnings growth in 2019. That's very low.